What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for anyone but myself. So please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out the brokerage app. Those 12 free stocks could be worth up to $30,600. There's a link down in the description box of the video. Click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. Why is the stock market dropping the way it has since the Fed had their June meeting? I've gotten that question from several of you through Instagram, through DMs. And I thought this morning I'd give you my opinion why. Again, guys, I'm just a guy on YouTube. My opinion is not the gold standard. It's just an opinion. So if you disagree with it, that's okay. I recommend you go out and do your own research and come up with your own opinion, and then you'll be good to go. But here's what I believe. If you remember, the Fed in their June meeting did not increase short-term interest rates. And that was the first time in over a year and a half they did not increase short-term interest rates at a Fed meeting. And the reason they didn't increase short-term interest rates in June is because they wanted to take a wait and see attitude. They wanted to see how the economy would react to not increasing short-term interest rates. Prior to the Fed's meeting in June, the stock market was on a 6-month upward trajectory. We were enjoying some real nice gains. But soon as that meeting ended, the stock market started to slide. And that's because the Fed chairman, Jerome Powell, in his comments said, you know something? We're going to increase short-term interest rates 2 more times this year. And that right there started the slide. Why? Because most investors, a lot of economists, didn't think the Fed would take that hawkish position on interest rates. A lot of us thought we were done with rate hikes. We would pause and then we would start decreasing short-term interest rates, which would, of course, continue to accelerate the stock market. But that didn't happen. The Fed basically said, look, we got 2 more rate hikes in 2023. And the reason we have 2 more rate hikes is because core inflation is not coming down as fast as we'd like it to. See, core inflation right now is around 5.3%. The Fed wants core inflation at 2%. Now, headline inflation is at about 4%. And it's been coming down a lot faster than core inflation. See, core inflation does not include food and energy costs, right? Or the increase in prices of food and energy, right? That's the difference between headline inflation, core inflation. The stock market thrives when interest rates are low, right? Where people and companies can borrow money and freely take that money, invest it, and get a positive return on that money. See, if I borrow money at 3% and I can take that 3% money and get an 8% return on it, then I'm ahead of the game. And that's when the stock market really thrives, when interest rates are low, or the perception that interest rates would go lower. And that's not what the Fed Chairman Jerome Powell sentiment was. His sentiment was this: be prepared, buckle up. We're gonna keep raising these rates until core inflation come down. And that's why the stock market started selling off, because a lot of investors took the position that let's take our profits off the table right now. We've had a good 6-month run. Let's take our profits. And I gotta admit, guys, I'm a long-term guy, you know that. But I took some profits off the table as well because of that reason. You remember a couple days ago, I did a video basically about Tesla. I bought some Tesla back in October of 2022, and I waited and waited and waited. You know, Tesla slid all the way down to $104 a share. I didn't panic because I knew Tesla is a blue chip company. I knew it would bounce back. I just didn't know when. Once it bounced back, I went ahead and took some profits. Now, I didn't liquidate all of my Tesla stock. I just liquidated half of it, took my profits, and I left the other half in the investment. Another reason the stock market is selling off is the anticipation of earnings coming out. You got second quarter earnings coming out starting July 18th, guys. And let me tell you, investors are not sure second quarter earnings are going to be strong for a lot of companies. So again, they're hedging and saying, you know something? We're not sure second quarter earnings are going to be strong. Once again, let's take our profits prior to earnings. The third reason is just what's happening with inflation from a global perspective. If you've been following any financial news, you'll know the UK, England, is having a hard time bringing inflation down in the UK. Their inflation number for core inflation is higher than the United States. And they don't know what to do. It just shot up again. So, and you got other countries like Japan who are very, very concerned about inflation as well. So those are the three reasons, in my opinion, guys, why the stock market is sliding. Now, that doesn't mean it's not the right time to invest. In my opinion, it is the right time to invest. I'm gonna give you 4 investments, paper assets, that I'm focused on and that I'm gonna be making moves on right now because they're down. Their per share stock price is down. It won't last long, I'm telling you. Any good news we get, July 18th, when second quarter earnings are reported, if that's good news. In July, when we get May's CPI report, if that's good news. And then end of July, when the Fed meets, I believe it's the 24th and 25th, if we get any good news from the Fed chair, that's gonna spark a nice little rally in the stock market as well. But right now is the time to buy before all of that happens, right? So let me name these 4 paper assets that I'm gonna be focused on, got on my watch list and buying. Number 1, Tesla. I've already told you guys, Tesla is a winner. It's a money maker. Why? Because it fluctuates in per share price quite a bit. And for a guy like me who's looking at individual stocks as a short-term play, even though I'm a long-term guy, I use my individual stocks as a short-term play. Tesla is perfect. 2 weeks ago, Tesla was what? Not even 2 weeks ago, $275 a share. Looked at it yesterday, it was under $250 a share. Right there, guys, that's a $25 per share difference. Do I believe Tesla will get back to $275 and beyond this year? Absolutely. So that's my first play, buy more Tesla. I'm just waiting on my target price. Once it hits my target buy price, I'm in. Meta's down, I want to say by 4% over the last week and a half. And then Nvidia's down by 4% last week and a half. All of these are big boy, huge tech companies, guys. And I've already told you, this AI boom, this whole tech industry is going to the moon, in my opinion. But I think those are three individual stocks that I'm going to be focused on and buying, because I believe when we get good news, whether it be end of July, in August, September, they're going to shoot back up and I'm going to make me a nice little profit. Now is the time to buy them if you're going to buy them. I'm not telling you what to do, but certainly consider them. And then the last paper asset, you guys know I had to mention this one. S&P 500 ETF, VOO. That's a Vanguard ETF. And man, I'm going to keep buying that one. Now that's my long-term guy though. That's the one I invest in along with Vanguard Information Technology, VGT. Those are my two long-term ETFs that I invest in for wealth building, right? And again, on sale, slightly down from where it was a week and a half ago, and great opportunity with great upside for you guys out there who don't want to be the expert. You don't want to pick individual stocks. You certainly can dive into an ETF like Vanguard S&P 500 ETF VOO. So there you go, guys. I've given you the reasons why I believe the stock market tumbled. Again, it wasn't a major sell-off, but it was a good enough sell-off to create some opportunity for people out there who want to build wealth. So I'm okay with that. I've told you guys over these next couple of years, be prepared, buckle up. The stock market is going to be bumpy. It's going to be volatile until we get inflation down and until the Fed is happy with the progress they've made with increasing short-term interest rates to bring down inflation. The stock market is going to be an opportunity, man, to get wealthy. But you got to get off the sideline. You got to put yourself in the game. So I keep telling you guys, if you don't have a Webull account, click on that link down in the description box. Open up that Webull account and go ahead and put yourself in the game. Start buying fractional shares of your favorite companies with as little as $5, man. Get in the game, guys. Get off the sideline. Wealth is being built. Don't miss out. Don't be scared, right? Do your due diligence, but get in the game. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.